Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And as usual, another episode in the monthly series where we will go over the high-yield covered call ETF landscape on the American stock market, on the US stock market. It just keeps growing and growing and growing, so much so that my head spins. Before we get into it, let's check out what the markets have done in the last month. As usual, pretty good, right? So S&P 500 up significantly in 1 month, 3%. By the way, I'm filming this on August 13th. Nasdaq 100 even better, 3.23, a little bit better. Bitcoin as well, reaching its all-time highs. Gold as well. So asset prices, the markets are at all-time highs. Everything is doing really, really amazing. So as usual, we will go through the covered call ETF landscape. So there's so many now that I've pretty much narrowed down a few categories where I'm going to group things together. This is my new strategy for this video because there's just so many of them. So the first category is going to be US diversified, semi S&P 500. So things that are ETFs that are covered call, not exactly the S&P 500, but they're diversified within the US equity. Then we're going to do classic S&P 500 covered call ETFs, zero DTE S&P 500 covered call ETFs, classic Nasdaq 100 and Nasdaq 100 zero DTE ETFs. The rest as well, some honorable mentions that I'll quickly go through in case you're interested in the many providers, covered call ETF providers that are out there. Many of them have funky ones, sector specific ones. Then we're going to look at Bitcoin covered call ETFs and also via popular demand strategy covered call ETFs at the end. I'd like to take a moment to thank today's sponsor, FIRE ETFs, who have two ETFs. The first one is FIRE, the FIRE Funds Income Target ETF, which has been designed for the FIRE community by providing a 4% target annual income level, right? So we've all heard of that 4% rule. This ETF has specifically been designed for that. So it has diversification included here. You could see the top 10 holdings if we scroll down, but it has diversification across asset classes, sectors, even geography. So this is one to consider if you're in that 4% stage. And if you're still wealth building, if you're still trying to grow your wealth, they also have the FIRE Funds Wealth Builder ETF, stock symbol FIRS, which is more designed for growth. And this one is also has a lot of diversification and really to take you through multiple, like it says here, multiple aspects or cycles of the stock market, including prosperity, recession, inflation, and deflation cycles. And you could scroll down, you could see that it's also very well diversified, really designed to grow your wealth over time as well. So then maybe if you want to switch over to a more income style and that 4% rule, you could switch over to the FIRE ETF. So if you're aspiring to become part of the FIRE community, you're in the FIRE community, these ETFs are great to consider for your portfolio. So let's go through the first five, which, and by the way, I forgot to mention, I will be limiting each category to 5 ETFs only. I'm always going to on the lookout for better ones, but I'm always going to try to put in my opinion, the 5 top ones in terms of return and performance. Return, performance, same thing. Yield and very importantly, performance as well. And for every category, we're actually going to do the total return comparison. The reason why I'm limiting it to 5 is not to go absolutely crazy. And there's just so many of them. And really it's designed, this type of video is really designed for you to make sure you know what's going on in the covered call landscape in America, in the US, and try to choose or to help you choose which ones are a better fit in your portfolio. So let's start with the first category, diversified overall US equity. So JEPI, of course, the OG is the first one. That's been around for a long time. Remember, you'll always get a 7 to 9% yield. Not my favorite one. It underperforms a lot because they're picking and choosing stocks inside the S&P 500, and S&P 500 one is much better. But even in this category, there's much better options. You'll see the total returns in a second. Its competition from BlackRock is Bali. This is large cap stocks. Distribution rate is very similar to JEPI. It's typically between the 7 and 9% range mark. And again, they pick and choose big cap US stocks, so it's diversified big cap stocks. You see the distribution yield right now is just under 8. Same management fee as well with JEPI. Of course, you have the favorite YMAX, which is one of my personal favorite in terms of YMAX ETFs. You have the Universe all-in-one yield max solution YMAX, right? So this has a very, very high yield. It pays weekly. Of course, the yield and weekly distribution could change, right, based on volatility. But this is kind of like an all-in-one. All the yield max products, or almost all of them, just the regular ones, if you will, are added here. So there's 35 ETFs in here. So you have a lot of big cap stocks in here, but you also have some ETFs in here, like some Bitcoin ETFs and Cathie Wood's ARK ETF and a gold ETF. So this is really nice and diversified across the US equity market with some gold and Bitcoin as well. You have Alti. I got to add Alti to this category because technically it is diversified. I just did a recent video about Alti, my thoughts on it. Make sure to check it out. This one is getting a lot of attention on social media. It's growing like crazy. It's even bigger than YMAX now, which is freaking me out. I think YMAX is a better fit as a core position personally, but Alti is very fun. They're hunting down very, very high yield, high volatile stocks to harness that volatility. So the yield is, I would say, it's always going to be higher than YMAX, but the stocks inside are going to be a little bit more risky, a little bit more volatile. Got to include it as in this category as one of the 5. It's actually doing really well lately. Will it continue? That's why you got to subscribe to this channel and keep watching this monthly series to know how these things are doing. QDevo from Amplify ETFs, my opinion, much better than Devo. Their Devo product is okay, but the yield is really low. That's why I didn't make the cut for this category. It's actually outperforming JEPI, by the way, but the yield is almost non-existent. QDevo, which focuses more on NASDAQ related stocks, is much more interesting. The yield is much higher. The yield is about 9% right now, and it's doing pretty good. So if we do a total return comparison for the 5 in this category here are the results. Of course, some of them are not, QDevo is the only one out of the 5 that hasn't been out for a year. So if you look at the 1-year performance, Alti is doing really well. It's actually the top performer, which is incredible, with YMAX in second place, JEPI in last place. So yeah, YMAX and Alti. Personally, I prefer the YMAX because it's more of a diversified. It makes more sense to me as a core position in an income portfolio. Alti could be good too. It could be fun. It could do really well. It looks like they're choosing really those hot stocks. But in a bear market, I think YMAX will perform better because Alti has the more hot volatile stocks, which tend to go down a lot faster in a bear market. But QDevo, no slouch either, doing pretty well. We'll see what happens after a year. And you could see the comparison versus the S&P 500 itself. YMAX and Alti last 1 year, outperforming the S&P 500. So yeah, really interesting, really cool. What was I doing here? I just have this open. Yeah, I was doing JEPI versus Devo. I was just checking it out. You could see here that Devo is outperforming JEPI with dividends reinvested, even dividends not reinvested. But the yield is so low that I didn't include it in this category. It's almost non-existent. But out of all of them, personally, I like the YMAX better. The Alti is great too, but check out the video I did. I show that the Alti total returns are much more significant and much better if you have the drip on. To live off of, I think YMAX is a better option. Moving on to the classic S&P 500, the most beloved index of all time. So we'll start with what I consider the classic ones, the classic S&P 500, straightforward ones that don't use the 0DT strategy. I think in this category we have 4. I excluded XYLD from Global X because it's such a bad strategy. It's an antiquated strategy. But here we go. You have GPIX from Goldman Sachs. Really good beginner, straightforward, classic, basic S&P 500 covered call ETF. You can't go wrong. Always around 8% yield, monthly payouts. You have the very popular SPY-I, which is very similar, a bit higher fee, but the yield's always about 12%. But if you're doing the same thing on the same index and the yield is higher, it means you're giving up more upside. They're doing more covered calls. So if the S&P keeps doing really well, keeps going up, GPIX is going to outperform SPY-I. But if you really want that a little bit higher yield, SPY-I is a great choice. You have IVVW. This is actually the lowest fee S&P 500 covered call ETF. Not doing that great, as you'll see with the total return, because it's a rinse and repeat strategy, kind of like XYLD, except XYLD is an at the money call, so you're giving up everything. IVVW is 1% out of the money, and you'll see that it hasn't been doing really well in performance wise. And the distributions are very, very high, sometimes all over the place as well. So something else to consider for this one here. You see the yields very, very, very high. Granite shares also Y-SPY. So this is an interesting one. Total returns okay. We'll check in a second. But they're doing this is part of their yield boost strategy. So they're doing options, put options on leveraged S&P 500 ETF. So if we do if we do a total return comparison, the classic GPIX is doing the best one. You see the 1 year one. But if you look at Y-SPY, if we look at the last 3 months, it's actually doing really well. It's outperforming everyone. So we've got to keep our eye on Y-SPY, everyone. The worst one is IVVW. It's even underperforming XYLD in the last year. But you could see the 1 year, XYLD. So GPIX, SPY-I, very, very good classic core positions if you want a S&P 500 covered call ETF. You see how the performance is very, very similar to the S&P 500 itself. Moving on to the 0 DTE S&P 500 covered call ETFs now. So in this category, we have the category is stacked. There's 4 of them right now. You have XDTE from Roundhill, weekly distributions, very, very high yield here. And I was surprised to see that pretty consistent weekly distributions in the last 5, 6, 7, 8 months here. Really, really good stuff. SPY-T, which limits the extraction rate or the yield to approximately 20% annual. So if you want kind of like a target 20%, you're good with 20%, you don't want more than that, SPY-T could be an option. They do a daily 0 DTE call spread, so a little bit of a different strategy. You have the lowest fee one from ProShares, iSpy, kind of like a classic S&P 500 0 DTE one. Total returns okay, we'll see that in a second. A little bit lower yield here. It could vary greatly. And then you have T-SPY from Tap Alpha, which has passed 57 million, which means we're probably going to see a NASDAQ version soon. This is also what I consider a classic 0 DTE cover call strategy. On the S&P 500, they literally hold the SPY and write a daily 0 DTE out of the money call on it. It's been doing really, really well. The top performer in the category, I believe, as we'll see in a second. You have SGTY from YieldMax, very, very similar to the XDT strategy, weekly distributions as well. T-SPY, forgot to mention, it is monthly distributions, but a very, very consistent 14% yield. So if you look at the total returns here, iSpy doing really good. XDTE still on top for the 1 year. T-SPY and SDTY have not been out for a year, but in terms of performance, last I checked when I did the comparison between each other, T-SPY is winning. You could actually see the year to date, T-SPY is number 1. Unfortunately, SDTY we don't have year to date, but 3 months it's actually beating everyone in the last 3 months, but not really enough data for me. I think personally I like really when there's at least 1 year of data. So moving on to what I like to consider the classic NASDAQ 100 now, covered call ETFs. NASDAQ 100, another great, fantastic index. S&P and NASDAQ, personally, I think are the best 2 indexes in the States. So there's JEPQ, which is the JEPI equivalent. They actually got a 5-star Morningstar rating, which means absolutely nothing. But it's not exactly a classic NASDAQ 100. They're kind of stock picking, but it's so close to the index that I decided to include JEPQ in the category of classic NASDAQ 100, but not JEPI in the classic S&P 500. Hopefully you agree with me. That makes sense. And if you don't, well, tough cookies. So moving on, you have... And by the way, JEPQ, the yield is typically around the 9 to 11% mark. It varies monthly, right, depending on volatility. You have the GPIC with a Q, which is the equivalent, the NASDAQ equivalent to GPIX with an X, right? So your classic NASDAQ 100 covered call ETF, approximately 10% yield. QQQI, which is doing really well, the equivalent of the SPY-I, right? The NASDAQ 100 equivalent of the SPY-I. A little bit higher yield, 14.5, very consistent yield. Invesco also has one, the guys who actually run the NASDAQ 100 index, but I think they're better at running indexes instead of covered calls because they're a QQA ETF here, even though it has a pretty good fee and a 10% distribution rate, so pretty close to what GPIC offers. It's underperforming, as we'll see in a second. And there's also TQQY, which is what the equivalent to the YSPY, so it kind of does the same thing, but on the NASDAQ 100. Put options on leverage NASDAQ 100 index covered call index ETFs. So total return comparison, we do have 1 year for a lot of these, even 3 year for JEPQ, by the way. But in terms of the 1 year, the NEOS one, the QQQI is actually doing the best. GPIC, very close by as well. QQA, the Invesco one, is lagging a little bit. JEPQ lagging a little bit. GPIC, which is very disappointing. This is what happens when you're stock picking instead of just getting the index. A lot of the times, just getting the index. My personal opinion here, but the numbers don't lie. Just getting the index usually works. But hey, TQQY, same story, doing really well in the last 3 months. But I actually did, since inception, total return comparison to QQQI, and it's not beating QQQI. So again, this is why it's important. We need at least 1 month of data, in my opinion here. So that's it for the classic ones. Let's go to the 0DTE NASDAQ ones now. You got QDTE from Roundhill. You're starting to get the drift, right? A lot of the same players have the same ETFs, or they have the NASDAQ ones and the S&P 500 versions. They also have Russell. A lot of them are Russell 2000 ones, but I feel like I'm not covering the Russell 2000 anymore because the index just sucks. It always underperforms the S&P and NASDAQ, so why bother? That's why I kicked it out of this series. There's just too many to cover. I don't have time to do it, but plenty of these providers, by the way, have Russell 2000 versions as well. So you have QDTE, with very high yield weekly distributions that I believe have also been very consistent lately from Roundhill. You have QQQT, which is the equivalent of SPY-T, right? Your maximum 20%, approximately 20% yield. IQQQ from ProShares, the lowest fee one. Distributions a little bit all over the place. Right now it's at 13. Of course, QDTY as well, which is very similar to QDT from YieldMax. There's also QQQY from Defiance, which I had originally kicked out of the series because of its poor performance. But because we don't have 5 in this category, I added it, left it in here for now. So if you do the total return comparison, the evidence is very clear. QDTE still seems to be the king. So from the 1 year, QDTE is still doing really well. We don't have 1 year of QDTY data, but if we look, it's actually a little bit better than QDT in the last 3 months. So we'll keep an eye on it. Of course, it'll be good when the 1 year comes out. But yeah, QDT, I keep getting questions. Is it still okay to keep it in my RSP? Is it still okay? Still doing really well, guys. All right, so that's it for the indexes. Now, I want to show you a couple of other ones, other providers that are maybe global exposure, a little bit funky, just to make sure you're aware of the massive amount of sector-specific or funkier covered call ETFs that are out there. So GIAX from X Funds is one of the only one that has global exposure. So if you absolutely want global exposure, very high yield as well. They do 0DT stuff, 24% yield usually, with some cool graphics here, of course. Yeah, it's still at around 24% yield. This is one to consider if you absolutely want global exposure. Obviously, a lot of it is going to be the US, but this is the same story all the time. Global versus just US for anything, covered call or not, US always wins. There's SVOL from Simplify, still pretty popular. 770 million in assets here. Very high yield distribution rate. But the strategy, I don't know. I'm not too impressed with the strategy anymore, but it looks like they keep updating and changing it. But hey, they kept their distribution pretty steady at 27 and now 30 cents. So some people still like it. That's completely fine. When it comes to yield max, guys, there's millions of them, right? I covered Alti, I covered YMax, which are more the all-in-ones, but there's so many other ones. Make sure to check them all out. Even the 0DTE ones I covered as well. But there's one for crypto, there's one for AI, there's one for semiconductors, there's Target 12 ones, there's just the short ones. There's so many. Make sure to check them out. Curve as well, they just launched a gold one. A lot of them. There's a lot of single stock ones here from Curve as well. A little bit less aggressive with the calls than Yield Max. Don't forget to check out Neos's other funds. They don't just have SPY and QQQI. They also have some sector-specific ones like gold as well, real estate, some bond stuff as well. Rex Shares has a lot of them as well. They even have some single stock covered call ETFs, which I like the format, covered calls and 25% leverage. I have a few of them here. Of course, they have FEPI and AIPI and SEPI as well in their covered call lineup. If you want tech, crypto companies, and AI, there's also Vista Shares. They have OMA. If you really like Warren Buffett's companies, they have this one, which is like follows Warren Buffett's companies, Berkshire Hathaway's portfolio with 15% yield. They have another one called CUSA. It just goes on and on and on. So guys, I can't go through all of them. It would be impossible. My throat would be dry. I would literally drop dead. And I'm sure there's many more other providers, but I'm trying to give you the overview here of what you could do your own research on. Final category is Bitcoin. You guys know I'm really into Bitcoin. I think it should be part of your portfolio. You have quite a few cover call ones. The 5 top ones, in my opinion, in this category. One is not actually cover call. One is YBTC from Roundhill, weekly distributions, BTCI from Neos. Yields are pretty similar, but YBTC tends to be much higher. You have the Amplify ones, which in my opinion are ones to really check out, Biddy and Baggy. Biggie has max 24% yield. Baggy has a little bit more. So if you are not that bullish on Bitcoin, or you want more yield and more covered calls, Baggy could be one to consider. But if you're very happy with 24% yield max and you want to capture a little bit more, Biddy could be one. And then you have Maxi, the one that's destroying them all in terms of total return from Simplify, because they're not actually doing covered calls on Bitcoin itself. They're not capping the Bitcoin upside. They're just doing a couple of put spreads and all kinds of income-oriented stuff to give you some income, but they're fully capturing the upside of Bitcoin. So if you do the total return comparison out of all of them, Maxi is beating everyone, obviously, right? Because if Bitcoin does really, really well and there's no cap on your upside, Maxi is going to win. But in terms of the other ones, a lot of them have not been out for more than a year. But if we look at the 3-month data, the competition is really, really hot, with Baggy being the best one in the last 3 months. But we'll see what happens after a year. If you want Bitcoin-related companies with covered calls, it's an interesting way to kind of invest indirectly in Bitcoin. You have SEPI, you have Blocks, you have LFGY. So this is kind of like an indirect way to get exposure to crypto. I think LFGY, the yield max one, is doing the best. Blocks is new, so we don't have much data on it, unfortunately. Then, of course, there's the strategy or MicroStrategy covered call ETFs, which are super hot, super popular. People got mad at me that I didn't include it, so I will include it going forward. I just have to, I guess, in this series. So this is kind of like amplified Bitcoin. Of course, you have Misty. The classic one, right? How much assets does it have, this thing now? Unbelievable, 5.66 billion. You have the one that I prefer, that I like, MSII from Rex Shares, because it has less covered calls, but 25% leverage. IMST from Bitwise. You have MST, the crazy one from Defiance, with a lot of leverage. You also have MSTR Weekly Pay, which doesn't really do covered calls, but they use 25% leverage. So many options here. Many of them have not been out for a really, really long time, except for Misty. But I actually did the total return comparisons. MSII, everyone, is beating everyone. It's the top one right now out of all of them. We don't have much data, but here's MSII versus Misty. You could see that it is outperforming Misty. So I was right. I gotta give myself some credit here. I think because of that leverage, because they're not doing covered calls on the whole thing, if you're bullish on Bitcoin, MSII is pretty much going to be the best one. MST has a lot of leverage, but this is more designed for traders. It's not doing that well, to be honest. Has it been out for 3 months? It hasn't, but I did MST versus MSII, for example, and it's not pretty at all. MSII is beating it, and Misty is beating MST as well. I think this one is more designed for trading, in my opinion, even though it has a weekly distribution. So that's it, everyone. I'm out of breath, but that is the overall US covered call ETF landscape. Again, many that I can cover sector specific. I'm always going to focus on the S&P, the NASDAQ, the overall ones, the ones that really fit as core positions in your portfolio, I feel, and I'm going to cover Bitcoin and strategy as well. So it's up to you to do your own research, and I'm trying to give you an idea of which ones maybe are a best fit for you, right? There is no best. It's just the best for you. So we're going to do this again next month. So stay tuned. Make sure you're subscribed to the channel. Check out the links in the video description below. I keep getting comments and emails on how do I book a coaching session and blah, 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 blah. So it's all in the video description below. So make sure to hit a thumbs up. I would really appreciate it. Like the video. It really helps. Take care, everyone. See you next time.